On today's episode, we are going to take a look at two giants. That's going to be Facebook and Netflix. Both of them have come out with some recent news that I think are pretty cool. So let's jump right into it. The first company we are going to take a look at is Facebook. And they're making some big moves. Two articles. The first article is Facebook pay buttons are coming to online stores in August. And this is a big move because as of right now, Facebook has kind of this Facebook pay. And this is if you're going shopping somewhere and you want to kind of purchase something, you have different options, right? There's different credit cards, there's different payment applications that you can use. Well, Facebook is now going to be one of them. At the moment, this Facebook pay button has only been in their product line, so it's only on Facebook Messenger, on Instagram, on WhatsApp, and that's pretty much it. But now it is expanding into other platforms. US-based customers will be able to make purchases from Shopify-powered businesses using the payment method. And I do think that's pretty cool, but I think this second report is a bit better for Facebook. So Facebook and Instagram will invest over $1 billion in content creators. So if you are a content creator, Facebook will kind of pay you if you meet like certain criteria or certain goal stones. And the reason they're doing this is so they can rival like their competition, right? They're trying to bring all these content creators to their platform, because if more content creators are in their platforms like Instagram, like Facebook gaming is another one. Now you're going to have more viewers there, and in the long term is going to be more ad revenue for Netflix, for Facebook, right? So definitely a pretty impressive move. At the moment though, Facebook's stock price is down about 1.18%. Today has been pretty red day for the stock market. We can take a look from its 52-week high. The stock is down not much, it's down about 3.4%. And in the past year, year to date, it has returned 27.7% to investors. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Facebook, if we take a look at fundamentals, super strong company. Positive earnings, positive cash flow from operations, expected to grow 15.1% on average. They have a very strong balance sheet of plenty of cash and short-term investments and no debt, right? This is why they're able to make so many great moves, just like that with the content creators, and also continue to innovate in new platforms. Next, if we take a look at Facebook's technicals, I do want to say right now the stock price, even with the current drop, is still a bit overextended. This doesn't mean it's a bad investment. This doesn't mean it's time to sell. It just tells me, hey, Jose, there might be a little more risk right now. But if we take a look at Facebook's forward price to sales ratio, and if we take a look at their forward EV to EBITDA ratio, we can say forward price to sales ratio, it's almost at its peak compared to where it's been in the past. And its EV to EBITDA ratio is also pretty high compared to where it's averagely been. So again, it just seems there's a little bit more risk on Facebook at the moment compared to where it's been in the past, but that doesn't mean it's a bad investment right now. It just say, hey, Jose, if I want to enter into Facebook right now, maybe don't go in with the full position at once, maybe dollar cost average over time. The second stock we're going to take a look at is Netflix, right? Netflix has also done some amazing news, and I'm pretty sure most of you have heard about them. But first, let's take a quick look at the stock. Netflix right now is sitting at $541. It's down about 1.1%. Year to date, the stock hasn't really moved. It's up 3.5%. And from its 52-week high, the stock has definitely seen better days. It's down about, actually not that bad, down 7.6%. So the first thing I want to talk about is Netflix is reportedly making plans to stream video games. I do think this is a great move for them because one, they're gonna most likely do this through the cloud, just like their streaming platform. So they already have the infrastructure for it. One great move. Two, I want to say the customer base that they have right now would probably be a great fix. And the third thing is, Right now, from reports, it doesn't seem like Netflix wants to make it a different segment, right? It would be included in your normal subscription. That doesn't mean the price might increase, right? It might increase $1 or $2, but it would be included there. And one of the most recent news is on Wednesday, they hired former Facebook gaming executive Mike Verdu to be the vice president of game development. And this guy right here, he's also been in Electronic Arts, which is another gaming company. It's been on Zynga as well. So he comes with a lot of experience in the gaming world. It isn't clear at the moment, right? There's still so much unknowns. Is Netflix going to create their games, or are they going to do something like how they do with some of their video content? Are they going to kind of outsource or third license some of these games? I do believe it's probably going to be a mixture of both. Another thing is this platform going to be in just mobile platforms? Is it also going to be available in all type of hardware from your TVs, your tablet, your computer, and so on? Or is it going to be limited to just certain hardware? I do believe at the beginning it's probably just going to be limited to one, and then they're going to continue to expand up into other platforms. Now, if we take a quick look at technicals, Netflix right now does seem a bit overextended, but for the past, I want to say since July 20th, this stock price hasn't really moved out of this trend. If these earnings do come out, I do believe Netflix might just explode. But one thing I do want to mention, right, is if we take a look at fundamentals for Netflix, and I don't think I pulled them up, Netflix has positive earnings, and they just recently, let's go to future growth, they just recently hit positive cash flow from operations in the past 12 months, right? So one question I have is, if they start to make their own games, how will that affect the company's cash flow from operations? How would that affect the company's free cash flow? And I do believe that's probably going to be the biggest effect, if anything, on the company. And some investors might not like that. Hey, right now the company is already positive in that metric. I don't want to go back to negative cash flow from operation, where it was pretty much all of 2020, 2019, and most years before then. If we take a look at their financial health, Netflix has about $8.4 billion in cash, $15.6 billion in debt. So they are a bit leveraged, right? I don't think it's bad based on their fundamentals, especially since they are positive in cash flow. If this kind of gaming market changes that up, now that's a whole different story. Now we take a look at valuation metrics for Netflix, pretty much like the stock price. If we take a look at forward price to sales ratio, it hasn't really moved much since June of 2020. So the stock price right now has just been sitting where it's at. If we take a look at EV to EBITDA forward, it is a bit cheaper than it's been in the past. Again, the real question is, how much will this gaming move affect this company's earnings, affect this company's cash flow, and how would investors react to it? But regardless, I do think both those moves, or both these things that both Facebook and Netflix are doing, are great moves to kind of continue the innovation. So let me know in the comments below, what are your thoughts? Take care, have a good night, and see you next time.